Hello, everybody, and welcome back to the DAS Trader Newsroom. We got a good one for you today. The world is an ever exciting place. Unfortunately, this time we have the market reaction to war in Europe. Can't really say I can remember ever announcing a war in Europe. Probably we haven't seen this since 2014, the last time Russia invaded the Ukraine and Crimea. So with that out of the way, I'm here as usual. My name is Michael DeJoy. I'm the Director of Educational Services with DAS Trader, and I'm a licensed professional. And I'm joined by my co-host, Jill Malandrino, Global Markets Reporter with Nasdaq. And just a quick announcement, we have another #1 Best Trader competition starting Monday. The dates have been announced. DAS is trading up with Nasdaq for another trading competition. Our registration starts on February 28th and goes through April 3rd. You can save $50 by doing the early bird registration between February 28th and March 7th. And the competition runs for 19 trading days, from April 4th to April 29th. Remember, the earlier you register, the better off you are in terms of using the platform and getting full benefits out of your trading software and demo mode. Prizes include up to 9 months of the DAS Trader Pro platform. Winner's name is to be displayed on the Nasdaq market site tower in Times Square. And one of the upcoming opportunities, Jill and I will be doing the broadcast from the Nasdaq Market Center. And Jill's there today. Welcome back to New York City, Jill.
Yeah, thank you. It's great to be back.
And so let's just jump right into the news. We talked about this 2 weeks ago. I've been talking about this for ages. I've been talking about the secondary invasion of Ukraine for quite some time. So certainly this is not a big surprise. However, it's never a good thing, when two countries opt that there are no diplomatic solutions and it's time to go to war. And in this case, it's just Russia blatantly invading the Ukraine from Belarus and from its own territory. I mean, it's from the people that I've spoken to today, it looks like Kyiv is already surrounded, and there's been some pretty intense fighting in the eastern provinces. So Jill, what comes next for the Ukrainian-Russian war and, of course, the market reaction to that conflict?
Right, Mike, and I think really that's what the question is. What is Putin's end game here? And it's really interesting to see just how susceptible the market is to headlines, because if you think about it, a week and a half, 2 weeks ago, we really didn't have Russia-Ukraine headlines within the market narrative. Everyone was focused on the frequency of rate hikes and the amount of rate hikes we were going to get. We started seeing the market, I wouldn't say bottom out, but start to find established trading ranges. Then we throw these headlines into the mix, and you can see just how that flushed everything out. And you can also argue that we were still at high valuations anyway, so perhaps this is the flush that we needed. But and then we wake up this morning, I was up, I'm sure you were up. Everyone's been trading for the past 15, 16 hours at this point. 3:30 a.m. Eastern time, and we get those headlines. And then throughout the day, you start to see the market stabilize a bit. And then when President Biden came out later in the afternoon, halfway through the afternoon session, and we got some more clarity around the strategy that our allies in Western Europe and NATO are going to take, that removed some of the uncertainty, because there wasn't as much conjecture at that point. So, I mean, if we think about it now, the Nasdaq 100, which was in correction territory, I mean, if we look at, you have PayPal up 3%, Amazon up over 4%, Starbucks over 1%, Apple almost 1%. The reversal has been quite stunning. So we have not removed ourselves from these 1%, 2%, 3% swings that we've seen in the sessions as of late. But outside of market reaction and how this could impact inflation with oil and natural gas, of course, in the Western European hemisphere, clearly there's a humanitarian toll that we have to keep front and center as well. So hopefully this will be resolved through diplomatic measures. Hopefully these sanctions that are being put on, and there are more sanctions that can be put on, will hopefully shorten the toll that this is going to take, and hopefully minimize as much impact as possible.
Yeah, so basically we have a lot going on. I mean, obviously the humanitarian effect is quite horrendous, and that's what we're most concerned about. But from a market perspective, the technicals, and we're going to look at the charts a little later on. The technicals, there's a huge gap down, and then that gap almost immediately filled, and then it kind of regulated for a little while, and then of course it, right after President Biden and some other European leaders, specifically Boris Johnson, of the UK, spoke, the market kind of continued to push forward, and the recovery was kind of underway. So let's jump to the next item, which is oil. Oil breaks $100 a barrel. Where does it go from here? I've been saying, probably we're going to head back to the prior high of the 2008, 2009 financial crisis, which is, 147, I think is the number. But of course, we did break that all important number. You and I have been saying that oil doesn't get to $80 a barrel or $90 a barrel without usually testing 100. In this case, we blew past 100 and then have since pulled back to the 100 area. My opinion is, obviously you certainly could expect a little pullback as we digest what's going on in the Ukraine and Russia, but certainly, the trend is higher, and trends usually get very extended going into the latter part of the trend, as we certainly saw with the stock market last year at the end of November, December. Things kind of got really extended to the upside before we've had this latest correction. So what are your thoughts about oil and commodity prices going forward?
Yeah, it's kind of like the perfect storm here, Mike, because not only are we in a high inflation environment, when you start to see the prices go up in oil and natural gas, not even in the US, but globally, clearly Europe is going to have to grapple with this at extraordinary levels. That only exacerbates the inflation situation, and then it will trickle down as well. If you have to grapple with affording gas for your vehicle, affording heating oil, well, that's going to take away from discretionary spending. And of course, we know how that impacts GDP, with consumer spend 70% of our GDP. So it truly makes it a difficult situation for the everyday consumer, global consumer. Then, of course, I think the other impact is when we think not only Federal Reserve, but how this is going to impact global central bank policy as well. I mean, just how much can the global economy take with coordinated rate hikes, but inflation continuing to move higher, and then of course with geopolitics in Russia and Ukraine. So it really is a perfect storm. And like I said, prior to these headlines inserting itself into the market narrative, it feels as if traders and investors were prepared to digest what was inevitable coming in March. And really the wild card was how much and what's the frequency. So to only add fuel to the fire, if you will, with oil prices moving with what's happening in Russia, is just makes a tough situation even tougher.
Yeah, that brings to mind, I mean, we were already factoring in a 50 basis point hike on the Federal Reserve Bank, going into the March meeting. I mean, with inflation was already out of control. Now you add $100 a barrel oil to that, like you said, the fuel to the fire, pun or, allusion intended. You literally have a situation where you could potentially see a rate hike meeting interest rate hike, okay, because inflation will only be exacerbated. It's potential. I remember back into the internet tech bubble days, the Federal Reserve used to just raise interest rates, on an emergency meeting basis. Not that that would happen, but certainly you could see a 75, point hike, a 75 bit, rate hike instead of, 3/4 of a point. I mean, that is certainly now in the cards. And that's certainly a concern for the markets because, oil is the key component. It's the prime commodity of everything. I mean, everything requires oil or natural gas to get to its final location. And I do think that one long-term impact for Europe is, I heard Boris Johnson speaking today, and, my own personal opinion that this was very largely about the North Sea oil line. I forget the name. It's like Northstrom or something like that, oil line. And they said that that's definitely been put on hold with this invasion, and that it's possibly even off the table now. Right. And that was the oil line that was going to run from Russia directly to fuel Europe, specifically Germany. And it looks like that might have, this invasion might have put the kibosh on that. And we're
Well,
not going to know the long-term effects of that.
But it's interesting, Mike, certainly in the short term, we know there's going to be volatility in the commodity space, particularly with oil and natural gas. But when you think about it longer term, how does it set up for renewable energy and goals that we have for 2030, right? We know Europe has been leading the way in terms of green bonds, sustainable sources of energy and so forth. So to get more sustainable resources and to gain independence from adversaries and reliance on oil and natural gas, well, here's the catalyst for it, right? It's going to be incredibly difficult for Western Europe to reopen those sources with Russia if they don't have that trust established that it's going to be a consistent supply. So this only furthers the sustainable energy and independence narrative. So longer term, that could be interesting. I mean, you're going to see the moves in oil now, but it seems to be the trend is finding other sources that are not only more environmentally friendly, but allow more independence.
Mm-hmm. Without a doubt. So that brings us to our last item is, are there any specific companies or stocks that stand to benefit with military action? So what is the usual market reaction? I've seen a lot of these memes passing about, that war is generally good for stock market performance. I've seen that the last 5 times that there has been an armed conflict, at least the last 5 armed conflicts, the market has bottomed out. And that even includes the 2014 armed conflict invasion of Crimea by Russia into Ukraine. So what are your thoughts first on what is the usual market reaction to a armed military conflict? And then second, what stocks specifically stand to benefit?
It's interesting, and I'm glad you brought this up because LPL Financial put out a great piece of research by Ryan Dietrich, their chief strategist, who's one of my favorite strategists to follow. And he took a look at historical data with bear markets for the S&P 500 since 1950. And this is our 33rd correction, but S&P 500 stocks rose nearly 90% of the time a year or two later with very strong returns following corrections that you see in the market, whether it's due to inflation, geopolitical tensions, just overall valuation. So longer term, S&P 500 names tend to do well 90% of the time since 1950, since he's been tracking this, or as far back as his research goes.
Yeah, and my big concern, of course, is this current inflation environment. Like, whether that's going to throw a monkey wrench in that typical or usual performance, is that the rampant inflation. And I would have to say it's rampant because I was the kids are off from school, it's winter break, and I was driving around going to various kiddie places with my son, and it cost me nearly $70 to fill up my car. Right. And then of course everything, you go out to a restaurant, I mean, you're not leaving a restaurant in the New York area without a $100 bill for 2. So it seems like
hundreds. But to your point, Mike, with inflation, the particular chart that I'm looking at, most of these correction years took place in the 70s and 80s, and we all know that inflation was historically high.
Yes,
right. And then the recoveries occurred after. So, again, history doesn't imply what's going to happen moving forward, but the back testing suggests that following a correction, that the performance tends to be good. Now, in the near term, I just feel like the markets are moving so incredibly fast, faster than any markets that we've ever traded. So look at, the obvious answer was oil this morning, right? Mm-hmm. Now look at it. Yeah. You wouldn't be looking at Nasdaq 100 stocks this morning. Now look at them. I mean, as we talk now, Amazon up nearly 5%, right? Yeah. So markets are just moving so fast. You have to remember too that our access to headlines and the speed at which they come out did not exist in the 70s or 80s. So it's just a very different market.
Without a doubt, you're right. I just checked my stocks, and we're going to jump to the charts in just a few minutes. And it looks like the rally is certainly in full effect at this point. But
certainly into the close.
Certainly into the close, without a doubt. So thank you so much, Jill. Your thoughts and comments are always greatly appreciated. I hope you have a wonderful weekend as always, and I look forward to seeing you in 2 weeks.
All right, sounds good. Take care.
Hopefully under better circumstances next time. We don't have to talk about a war. Although that is the last thing I wanted to talk about. Do you think that China will take this opportunity to, they already did some massive air flight incursions into Taiwan's airspace this afternoon. So do you think China's going to take advantage and opportunistically press their hand here?
That seems to be the concern that I've heard, because you have to think about landmass and you have to think about you're talking billions of people at that point. So it certainly is a concern. I think, on the flip side to that, crippling those two economies, certainly weighs on the situation as well. But I think that's the outlier that I would probably be most concerned about, besides, the immediate situation.
Without a doubt, without a doubt. Well, thanks again, Jill, and I'll see you in 2 weeks, hopefully
All right,
under
sounds
better
good.
circumstances and no new wars.
All right, I'll see you. Take care.
Not something to laugh about, but I don't even know what to say at this point. I guess we just gotta, deal with it. All right, Jill.
All right, I'll talk to you soon. Take care.
All right, so here we are. This is the rally that Jill and I were just talking about. You can see the S&P is just flying. Okay, so we got that going on, which is pretty significant. I mean, you can see here that we have a very, very, very significant move off the lows. This is actually this bar is called a it's actually called a gap and snap bar, and this is turning into a bullish counterattack. That would have been a bullish counterattack at this point, and now we've gone into what's called a bear trap. It's not a complete bear trap, but we're up to the 50% mark going into the close on the S&P. On the QQQ, that's even more. It's actually a full bear trap on the QQQ. That's the one that represents the Nasdaq 100, and I would expect that we're probably going to go on a little bit even further. And take this up another notch. On the DIA, we have ended up as a bullish counterattack. So this is a gap down, gap and snap, bullish counterattack. So these are very, very bullish rejections of the low, triggering a possible spring back to the upside. Now, you wouldn't expect it to go and make a new high. We're still in a downtrend. This is a correction-based downtrend. And then we have USL. This is the big rejection, right? We gapped all the way up here. We've come down, back down to the ground. USL represents the 1-year contract on oil futures. Okay, and then we have the, let's see, I'm gonna just bring up another one. Let's just take a look at Apple, AAPL. Okay, Apple, we gapped down. We have a gap and snap. We have gone to about 50%, 50% correction zone. So certainly a nice move back up off the lows on Apple. And let's just take a look at Microsoft, MSFT. This is another one of the big stocks. I mean, Microsoft, incredible recovery. This is actually a full bullish engulfing bar. So the bullish bar engulfed the bearish bar. So Microsoft having a tremendous recovery. Moderna has been down quite considerably, but they had some good news. They had earnings come out and their earnings was better than expected. So they made a tremendous move up today. That's even with some very sketchy findings about the origin of the coronavirus. So I was concerned that possibly this stock would have gotten really knocked down, but their earnings speaks volumes. They had a good earnings report, and the earnings report really outweighed the findings that some of the genetic material that they had patented ended up in the coronavirus, which is certainly an interesting story that we haven't heard too much about in the mainstream media. But needless to say, Moderna Pharmaceuticals also up. Let's just take a look at GBTC. This is Bitcoin. Bitcoin certainly putting in a little bit of a bottom here, rejection of the low. Ethereum as well, ETHE, which is another tracking stock that tracks Ethereum. So if you go across the market, it does look like the market, although was initially down very considerably, has kind of rejected the breakdown and has rebounded pretty considerably. So pretty amazing recovery on the markets after this Ukraine being invaded by Russia report. So on that note, I'm going to jump back to the slides, and we're going to wrap it up for today. Just do a couple of announcements. All right, so stay up to date with all things DAS by signing up for our monthly newsletter. We have a monthly newsletter coming out in just a couple of days. Certainly, we have been spot on in everything that we've talked about in the market in terms of being cautious, that the market was ready for a correction, and certainly being well aware of inflation and how to deal with inflation in your portfolio. Simply fill out the form at the bottom of the webpage on www.dastrader.com. Subscribe to our YouTube channel and Dash Trader TV. For all of your DAS Newsroom reminders. And of course, follow us on social media. We give you all kinds of helpful tips related to trading and whatnot. And you can do that by going to our social media sites on LinkedIn, Twitter, Facebook, and Instagram. And don't forget, we have another trader competition coming up in April, and you can get signed up for that. And look forward to seeing you all in 2 weeks. Trade well, everybody.